So you've heard me say it in past conferences. So if I say it again, how many people would be surprised to know that wealth doesn't last more than 3 generations? Ancient Chinese proverb, I don't speak Chinese, but it is ancient, that wealth doesn't last more than 3 generations. You think about American companies, most don't last 100 years, and I think 90% don't last 10 years. So it becomes really important. So as we think about that, the family offices and the families that survive, I believe they share this one trait. They stopped treating capital as a goal, and they started treating it like a tool. And that shift from custodian to operator, and you're going to hear me say that a lot too, that operators are what keep things going. That's reshaping what iconic family offices really mean in 2026. So on stage, we have people that have been able to continue operating at a level most never achieve. And I want to start off with introductions, but also, what is one thing that your family has done in the last 10 to 50 years that has been a really wise decision? And we're going to start from the end. And, well, that's fine. Go ahead, sir.
Leslie here.
You can touch
Testing, can you hear me?
Yes.
Yes, I'm great. I'm good.
So what is one thing that your family has done in the last 10 to 50 years? What is a lasting impact that was positive for your family?
Well, first of all, my name is Leslie Giscombe. I'm the CBO of Femitron Systems. We're a nano-satellite company that's stationed here in the United States, Japan, and Nigeria. And it's a pleasure to be here on this panel this afternoon, this evening, actually. The question was the last, 10 years?
10 to 50 years. What is one wise decision that your family has made?
I'm sorry, I missed
What
that.
is one wise decision that your family has made in terms of your investing, in your philosophy?
Okay, I would say 10 years, I would say to have passion in whatever I do, to be driven by purpose, and that made a lot of difference in whatever I did, period. Thank you.
All right. Next.
Hi. My name is Ishir Sani from Iron Shield Capital in London. I spent about 15 years in the UK at Citadel, Goldman, Neuberger, Blue Mountain, and as the head of special sits at Hildene Capital, which is about a 12 billion AUM firm, running distressed strategies. I'm happy to be here today. We've done a 75% IRR just over the last 2 years buying distressed bonds. I also manage my family office. We started with the Sitara family in the 1940s in Delhi. We owned one of the first auto parts distributors in India. And one of the lessons that my grandfather taught me in Pusa Road in Delhi, and this was about 30 years ago, was always to have 20 to 30% of your assets in cash or liquid securities because of 2 primary reasons. You can read Seth Klarman's Margin of Safety as well. He talks extensively about it. But number 1, you never know what opportunity is coming, what dislocation. It doesn't mean that there's a recession, but there are always dislocations across the 40 global asset classes, across the 41,000 publicly traded securities in the US, and across the 4 trillion of public traded debt in the US. There's always something going on. So I think having that cash to be opportunistic is very important. And it also means not to over-lever yourself, as that is how you impair capital permanently. So that, I think, is one of the most important lessons.
Thanks. Iraq.
Thank you, sir. My name is Iraq Christopher. I'm the CEO of This Famous Ventures. We're a venture studio model where we help early stage startups and emerging brands with the trifecta of money, media, marketing, with the thesis that if we can help you do 2 of those 3 things well, you have a good chance of success. And if you can do all 3 things well, it's pretty hard to fuck up unless you're Adam Newman or Sam Bankman-Fried. And our thing that we would like to just take an educated risks is the thing that's made a difference in our lives. We got introduced to Bitcoin in 2012. And so it was a little bit opportunistic on that front, but also hedging with other things like traditional asset classes as well. That has recently come to the forefront lately now with everything that's going on with the current climate. And So be a little bit willing to take a contrarian view and take an educated risk so that, if you have a tremendous upside, it pays off.
Thanks.
Hello. Hello. Hello, my name is Lala. I'm an agentic infrastructure architect, and I'm also a founder lately of Agentic Day Summit that I did Monday at Tesla, so I'm very happy about that. So what I've learned, my family and everybody is like, invest in skills. I think skills are the most important. Invest in skills and be humble. You never know too much. Keep investing in skills and stay humble and keep learning as much as you can. And that's what I think is the most important.
Hello, everyone. My name is Sylvester Onwemu. I come from a very prominent Nigerian family. I had I had an exit in my early 20s. Then I became an executive at Google for several years. Then became an executive at IBM after that. I recently just left to focus on helping my portfolio companies that I'm invested in as a strategic advisor, and then also to do something transformational in Nigeria. So I'm building about 1,000-acre technology park for the government that's going to be focused on power, data centers, and workforce transformation. And I'm working with not only the African government, but also the US government, as well as a lot of the enterprises that are in the region. What my family has taught me is to be a subject matter expert in your investments. I know enterprise AI. That is an enterprise technology. That is something that I know very well. It's something I've been a part of. It's something I've invested in. I also like to get deep into my investments as well. I come on board. I sit on their meetings. I mentor their engineers. There's nothing about their businesses that I don't know. And when fires raise, I'm always usually there to fix them, and I leverage my relationships that I've made across the tech industry to help the companies I'm invested in as well. So be a subject matter expert, and also be ready to save them when they're hovering by the flames.
Hi, everybody. My name is Brian Tolaby. I run Tolaby Capital. My family office is invested in about 36 space, AI, and longevity companies over the past, call it 10 years. I also run a company called Ahura AI. We invented technology that enables people to learn 3 to 5 times faster than traditional education to address the impact of the 4th industrial revolution and the biggest labor disruption in human history. We're going to have an announcement about an exit in the relatively near future, but I don't want to ruin it here. I also work with Brock on a number of his projects. One of the things that my family did, to answer your question, Keith, is they escaped the Islamic regime in Iran. And that's had a huge impact on myself and my entire family, because we came here to the United States, which hands down has the best government, best system, best culture, and best mindset of innovation and risk-taking that enabled me to learn the skill sets necessary, calling back to some of the things some of the other panelists spoke about, which enabled me to start building satellites for NASA when I was 16 years old at Goddard Space Flight Center, and then enabled me to either build, found, or work as an executive at a series of 7 technology companies, several of which had very large exits. So thank you for having me.
I'm David Hamilton Nichols. I am a 4th-generation Californian who is now a refugee here in Florida. But back in California, when my great-grandfather, thank you for whoever said welcome, back in California, when my great-grandfather came there, probably before around 1900, they were doing agriculture. And over time, obviously, California developed. It was a natural transition then into real estate, although there is still ag land in the family. But I would say that over the last so many years, the big change that has been done has been getting into things like alternative assets, such as early stage companies, and that has been a major shift that is going to have a major impact, because we are going through civilizational changes, actually. It's not just that we are seeing tech changes, we are seeing civilizational changes. So getting that next wave, just like my family before got into real estate as ag land was developing, this is the same thing, and it's actually a much larger thing. So I would say that is the biggest thing, getting into tech, getting into early stage companies, exploring alternative assets.
Hi, my name is Gaurav Kohli. I'm the founder CEO for a company, Vital Friend. We have invented the first FDA-cleared consumer wearable medical watch in the world that can take a blood pressure and can save lives, because it continuously tracks all the different data that is diagnosable and medically, clinically graded. So that's my new startup. But let's backtrack a little. So basically, this is my 5th startup. I've done very well in the first 4, and most of the people here use actually my products in the first 4. My name of fame was the code Java when it was written. I actually was involved in writing the code open source with James Gosling and others, so that was one of it. But back to what did my family teach me? Many important things. Relationships are very important, because no matter what you do business in this today's world, relationship still goes a long way. Language is second. It's very critical. My kids speak 4 languages. This is Chinese, Hindi, Spanish, English. Because these are the 4 languages that I believe are going to be the trading languages for all over the world. So they do that. And then the third I would say is invest on people, people, people. You're not investing on a company, you're not investing on the type of assets. Assets will come in, crypto will go up or up all the time, or something else in healthcare will go up. But invest on people, because they will always give you the best returns.
Thanks. Great opening. And I do want to follow up on Gaurav, because even though I only speak one language, if you could speak Mandarin, Spanish, and English, that's 70% of the world. You can speak the 70% of the world. Hindi, well, we'll talk about that later. But I actually live in the most Indian city in the United States. So, all right. Next up, I want to start with Lala. Good seeing you again. What is one thing that has moved you from being passive to an active allocator, and has that been a good move or not a good move for you? And we're going to go this way after you, so you rock next.
Passive is not my word first. I'm never passive. I'm always active. So first thing, what I like before doing anything is building a community and building trust. Without building a community, having trust, having integrity, being transparent, you cannot build. My background is architecture. I studied architecture. So I always go with the mindset of an architect. I like to build the foundation and build up in relationship, in business, in everything, even allocation. So if the foundation is not right, there is no trust, there is no transparency, there is no integrity, then there's nothing to build. One thing that I value most is your word. Like, if you don't keep your word, you're out of my way. So first thing, when we shake hands, you keep your word, then we can talk. That's how I size people, because we have a say actually in our I'm Arabic and I'm Muslim. We say man ghasha laysa minna. So if you cheat, you're not one of us. So you cheat, you're out of my way. I'm not allocating. So if I can trust you, then we can build forward. That's what I've been doing the whole time, is like building a community by giving also, not just taking. A lot of people just want to take it right away. I think being a giver is the most important. First, give, show your added value, then ask for something. Don't even ask. They're going to ask you for something. That's how it goes. So that's how I built like a nice community actually here in Miami of Agentic and Web3. And I'm thankful. I'm being invited also by Anthony, by a lot of people. Always thank you. And thank you to Hadi, to Sayed Hadi actually. And thank you for everybody. But this is it. Trust, integrity, that's what takes you far.
So we've always tried to be as active as possible. I mean, I don't know why anybody's thesis would be contrarian to, if you own equity in an organization, why would you not want to maximize its value? And so, like, we acquired a minority equity stake in an AI company back in 2019. And they had gone and done a whole bunch of stuff in generative AI, and they actually ended up going through an accelerator that was Walmart-backed, 1 of 10 companies. They're now partnered with an organization that services 15 of the top 25 retailers in the world. So they're like doing okay. And in the last week, I had a conversation at a tech conference, and I've got a great relationship with a major airline, and had a conversation about AI. And again, to your point, it's like I meet some really interesting people in the world, and almost every conversation I have is like, what's helpful or valuable for you right now? And you'll get unbelievable answers from people sometimes. And what's sad is the vast majority of people never even think to reciprocate. So always ask that question, because I did that with this airline executive. He talked about not wanting to be in the cloud. He wants something bespoke. And I said, can I introduce you to one of my founders who I haven't chatted with in like a year, but I'm helping to create the value, and he's going to walk through the penthouse suite of the airline as opposed to trying to go through the front door. So we're very active in what we do.
Thanks.
So I've always been an active investor. It's a passion, and it's being an active investor not just in securities, but in people. And one of the investors that I invested in is a gentleman named Jay Singh of Special Sits Research. He owns one of the largest communities on what was Twitter. We actually held one of the first spaces with Elon Musk about 3 years ago about capital allocation strategy. And through that network of almost 3,000 high net worth individuals, through our Discord, through the website, that helped me allocate my personal capital by getting diverse viewpoints and learning from others, who many of whom were younger than me. And it helped me make my first investment in Micron, which is 10x, my first investment in SanDisk on the power side in Constellation. And I think investing in people and learning from them, the time value of experience is 100 times more powerful than the time value of money, because that information is invaluable. And I think if it's one thing that you take away, is invest in the best people and actively allocate.
Yeah, there's a great question that you asked, because we're a space startup company. So we're actually the first African-American space startup that won the SAT show last year. We beat a company that raised $83 million at that particular event. Up to that time, we raised only $150,000, believe it or not. And our reason for winning is mainly because of the problem that we solved, and that is to democratize the African continent. There's over 10,000 satellites in space right now. The United States has over 7,000 of those satellites. The entire continent of Africa has 1.4 billion people. We're looking at 68 satellites for the entire continent. So this is a problem that our company solves, and that is to be able to democratize the continent with CubeSats. So we specialize in CubeSats, which is another term for nanosatellites, which is another term for smaller satellites. And basically what we do is intentionally utilize AI technology to be able to enhance them, to actually take away the barrier that now exists between the developing countries and Africa. Because you have 54 countries. Out of the 54 countries, you only have 17 that have satellites. And out of those 17, they have maybe 1 or 2. So the most countries with the most satellites in Africa is Egypt and South Africa. Okay. So what we're doing is we're allowing our CubeSats to be able to enter that market for not $500 million, not $250 million, but anywhere from $2 to $10 million for a CubeSat that can do a third of what some of these other satellites can do. So we're intentionally developing partnerships with universities, with some of the different countries.
Universities in the U.S. or universities abroad?
Yeah, well, we are a founding member of the University of Florida Astro Space Institute. So
I mean, this is a whole separate conversation.
Right, I
I'd
know
spoken to Queen. I was mentioning 2 weeks ago, we were at a VC summit, and a core issue with the continent is how do you get the infrastructure? And
Correct.
So we can keep talking about that, but we're going to move on. But thank you very much.
Right, thank you.
I'll go over to, we'll go to Gruff.
Okay, so basically I'm neither passive nor active. That means I don't spray and pray. I basically are sensibly to evaluate on the people, like most of the people have said here, the same theme. And then being in tech for so engraved, I usually go towards the tech investment, because on startups, and there has to be some kind of advisory role, and there always have to be some kind of, because tech founders need help, not just money. So you need to be able to open strategically more partnerships, more knowledge, more expertise, and all that. And once you do that, those companies will flourish. But people first, advising second, and basically showing them strategic partnership.
I do not take on an operational role in the companies. However, I often take on a very active role as an advisor for companies that are in my portfolio and also some companies that are outside of my portfolio and a VC fund. And what that ends up looking like is I have a very broad and eclectic network, so I often then bring partnerships to those companies. Sometimes maybe a friend of mine might end up investing in those companies, when we look at deal flow together then. Also, I think it is very important sometimes to be able to give strategic advice. You need a different set of eyes on things. There's a collective wisdom when more people are looking at something, somebody is going to see something that founder is not going to see. So having that advisory role is very useful because that fresh look is important. Strategic advice, partnerships, network, all of the above and more is how I would say is my active role. But I don't like to take on the operational side. That is a boundary I have not crossed.
Okay.
Do you mind, Keith, if I take a little bit of a contrarian role?
You can take a contrarian role.
I do agree with a lot of the folks up here. I think there's a 80-20 rule, right? The Pareto principle. And as a person that founded or built 7 companies, a couple unicorns, a bunch of exits, I think fundamentally about 80% of investors and VCs actually provide negative value when it comes to advice. There's a small 20% that are experts in what they're doing and provide fantastic advice and provide fantastic introductions and so forth. I will say Keith and David, who are both investors in Ahura, provided fantastic advice, fantastic introductions. They were part of that 20%. And so as an investor myself, I am very aware that in 80% of the deals, I don't have the expertise that the founders I invest in already have. That's why I invest in them. I invest in people that are smarter than me, more capable than me, have more grit than me, and I provide the resources for them. Now, if they ask me for help, if there's doors I can open in government, in customers, in introductions to other investors, I do that, and for some companies more than others based on what they need. But my principle is I like to find the people that don't need me, that are able to build without me and can run through walls that allows me to invest in more companies and also build my own company at the same time, which oftentimes that allows me through Future of Humanity Foundation, these events I host, to put those people on stage if they need to be. Then they get to see some of the things I'm doing so I can lead by example. So sorry for being contrarian though.
You're not contrarian, that's fine, that's good. Sylvester.
So I used to be somewhat passive, and then I just learned from that. A couple examples, there was a company I was invested in, and their engineers were calling me, telling me they were gonna quit and asking me for other jobs. I flew to New York to go see them, and I found out the CEO, who's my friend, he was into public humiliation on their calls. And he would just destroy them on the calls. So I said to him, I had a 2-hour conversation with him. He said it was the Elon Musk style. I had a 2-hour conversation with him, and then I said, okay, I'm gonna start joining your weekly stand-ups just to make sure you don't do that. And he got back on track. Another one of my friend's companies, I could see they were close to an exit. They just needed a couple things. Connected in with Google. They set up a partnership. Connected it with IBM. IBM bought their company for $350 million. Another company, they were circling the drain. They just weren't doing anything right. So I brought in one of the best marketing people I know. I brought in a group of about 5 Google engineers who I'm friends with. I brought in 3 of my friends who are really, really good enterprise sales folks, and they turned the company around, and now they're being evaluated for an acquisition. So it just helps me sleep better at night when I know I can be a part of it. And similar to him, I always take a strategic advisory role within the company so I can see what's going on, I can see what they're doing, I can leverage my network to help them whenever they need it.
Great, thanks, Sylvester. I think we have one last question, time for one last question. I'm gonna start with Ishar. And it's a deeply personal question, so I want everyone to have a chance to think about it. I think you've probably thought this through. If your family wealth, define any way you want, didn't survive the next 50 years, in your mind or heart, why did that happen? Why was that failure? What caused that?
So that's a great question. I think the biggest failure when it comes to families is not sharing the same core values. So instilling your values in your children, instilling a respect for your family business, a respect for each other, and a respect for capital and capital preservation. Those are values along with any religious values, along with ethics, along with kirtkaro, like we say in Punjabi, work ethic. Those are things that are very difficult to learn as an adult. They have to be instilled when you're young. So I think when it comes to keeping a family legacy alive, it really comes down to values.
Thank you.
Yeah, great question. I think legacy building is another thing that's important, and I think a lot of times, depending on your family background and the culture that's in place, it's not a focus. Okay, and for me, it's important because I think education is one thing, but I think leading by example is another thing, and I would say that. I feel that I have a responsibility regarding the legacy that I pay attention to, that I leave behind. And that's one of the things that I love about, I must say, this is my first conference, summit, and I must say that I truly feel that a lot of the people who are in this room are not here just for a transactional experience, but they're actually driven by a purpose to make a difference in the world. So I really appreciate that. Thank you.
Thanks, Leslie. We're going to just make it easy. E-Rock, and we'll go this way.
So I'll just tell a quick story. Like, just structure like your generational wealth, like have your, excuse my French, shit in order, right? Like, make sure you know what you're doing with the wealth that you've created so that the next generation doesn't let that erode. A colleague of mine organizes events and has a community, and to be in the community you have to have a net worth of about $500 million if you're poor. And one of the things that he is advocating is that you don't give, like, equally distribute to your children the money. Like, hey, here's a fifth, a fifth if you have 5 kids. Put it into a vehicle that the principal can never be touched, create distributions, and let that continually, like, allocate snowball so that it's multi-generational. And so there's a very famous family that, like, now all of them literally, like, had a family reunion, and some of the people had to take a bus to get to the family reunion because of multiple generations of letting that wealth erode and not being fiscally responsible. And so that's if you're not doing that, then I guess to some extent you deserve to be poor.
Lala, you're up.
So for me, most of the people, when they inherit the money or something, they're not responsible of it. So I think responsibilities comes first, a mindset, and great education. I know a lot of people that just inherited a lot of money and they just threw it out of the window because they didn't work hard for it. So if anybody didn't work hard for his money, it's not gonna happen. So I think how to keep the wealth in the family, you have to raise leaders, not followers. You have to teach them how to invest and how to deal with the money and how to manage the money. I have myself 4 kids, and I just told them I'm leaving you nothing, just a house and your education, and I want each one of you to not rely on me, and I don't want to rely on you. And you lead by example. So if you're not gonna be a leader and you're not gonna be accomplished, you're not. You don't wanna actually hand something in a silver plate to your kids and say, hey, I have $1 billion, you can have it. No, I wanna see if that kid can actually take all that responsibility and take ownership for it. So the only way to pass on the legacy, you wanna raise a mindset, a culture, and some values, and as a child, you have to teach them how to trade, how to do stuff to keep it in, or it's not gonna happen. It's not gonna be a skill that you're gonna learn. They can be a student, but they're not gonna know how to manage their money. So if your kids come to you, my little girl just, she does horseback riding. I didn't wanna pay for her show. She came in with, she's not gonna be happy with this story live, but you never heard it. She came with her couple of shoes. She has nice shoes. So she went online, she's 13. She saw that the shoes were valued at $1,700, and she wanted to go to a pawn shop. I'm like, pawn shop? Are you in drugs? She's like, we're gonna sell these shoes and I'm gonna ride the horse. I'm like, just the mindset of doing business, I'm already happy with you. then I'm gonna let you go to do your, like I think everyone
Giving them
should do
the
it.
entrepreneurial spirit.
Yes, from the beginning.
That's great. Thanks, Sylvester. We're gonna wrap up, so.
Sure, sorry. So I don't have kids yet, but I can just, think about the way my parents were. They were, you gotta protect your kids. First, you have to train them correctly. Like in my family, we were never allowed to get Bs. Like it was bad if like we ever got a B. We had to read a book a week, and my parents would quiz me on it. They always had to know who all our friends were. Like I can just like go out and run around. Like that was very, very intense. But they gave me that fundamental training so that when I made it to the next level, I was prepared for it. And I understand the importance of, just being great, right? And being disciplined and being strong-minded and being careful with the people I allow in my life. So I'm gonna be 10 times worse than they were as a parent. I already know that, but that's just necessary. And that to me, that's
call
how
them tiger parents.
Yeah, no, they were Nigerian parents. Like, so that's just how it is. So protect your kids and then, lay the fundamentals in place so that they can be as great as they can be.
Thanks.
Well, it's funny you asked that question around the 3 generations to lose the wealth, because my family has a little bit of experience with this. If you go way back in time, it was a direct descendant of Artaxerxes, and then they lost everything when the empire fell, and then the family rebuilt and built a lot of wealth, and then a couple generations of mismanagement, they lost everything, they rebuilt again, they lost everything again, and during the revolution, my parents lost everything again when Khomeini took over Iran, and we came to the United States after spending a couple of years in a refugee camp with nothing. Now, of course, I've rebuilt it again. And so I've spent the last 5, 6, 7 years, I don't have any children myself, but I've been talking to a lot of very prominent wealthy families, asking them, how do you take care of your family wealth? And one of the things that I thought was really interesting is the families that have been around for 4, 5, 6, 10 generations all talk about how they don't just hand everything over to their kids on a silver platter, much like many of you have been talking about, where they set structures where the kids have to earn their right to take over part of the family empire. They have to go out and build a business or become an executive at a prominent business or get their PhD or MBA and go out into the world, build something, develop skill sets, and then come back and bring those talents and skill sets back into the family. And at that point, they get to take some of that inheritance. And so I think enabling your kids to have to earn it, and that's something that I'm thinking of. I'm probably going to start having kids in the next couple of years. Something I've been thinking a lot about, and I think it's critical. And as many people here said, the culture that you instill, the values in your kids, so they don't think it's just something that they deserve to get, that they realize they have to earn it.
Yep, thanks, Brian.
I would say if my family were not to continue for the next 50 years, the greatest risk is that I didn't have kids. I am confident in my I'm confident in my ability to perform. I'm confident in my ability to pass on values because I was raised with values, and my dad was thankfully very cheap and made me learn very early to earn. So I think those things are all very important, but we have 3 of us in a row here who have not yet had kids. So I think that is a great risk of for the next 50 years. That's something that needs to be accomplished, or the family will not go on. As I say, I'm confident in my ability to pass the values on.
So for the 3 single gentlemen, or not necessarily single, but fatherless, in risk management, we say you need to have a backup plan.
Yeah, risk management. That's the risk manager in me is coming out here.
All right. Well, there is some Chinese billionaire that's like fathered hundreds of kids.
1,000 kids.
All right. Anyway, that's a different story. Gaurav.
So I will not repeat. I think the panelists here have already said it very, very well. It all comes down to values, kids, training, teaching, everything. But one thing I will bring up, the previous speakers had said, we need to bring our kids in this conference. And I think that is absolutely true, because with this conference, when they learn, they hear, that's a much higher. And yes, you have learned enough actually being here. So thank you. But that's what I believe, that I think all of this, plus having the kids really see it in action, will change life.
Yeah, I couldn't agree more. That's what Kyle out there, Kyle Offray. Yeah, and if you ever come to Silicon Valley, you'll see my kids just like Christina's kids doing photographs, talking to people, greeting people. I mean, I think that's really important. So want to appreciate everyone on the panel. I want to thank Anthony again. Anthony, great events. I'm glad to make it. Carmelo, come on up.